So ASRT Holdings' fourth quarter results are out, and honestly, they look horrible. Really, they look horrible. As we see here, revenue went down a lot, from 32 million in the fourth quarter of 2024 to only 13.5 million now, so definitely not a good sign, right? Besides, yes, it's true that gross margin expanded when compared to the fourth quarter of 2024, going from 44% to 57%. Yes, that's true. And that's also good to see, right? However, when compared to the previous quarters, gross margin actually went down, as we can see here, going from 70% in the first quarter to 57% now. So, another negative point. Moving on, the company also posted an operating loss of $14 million, which is in line with most quarters here. However, when we take a closer look at how much this represented in terms of margin, the situation gets much worse. Much worse. I mean, ASRT posted an operating margin of negative 105%. What's happening to this company, right? And well, if the company posted an operating loss, then it's natural to expect that it also delivered a net loss, which was exactly the case. As we can see here, ASRT posted a net loss of $12 million. So yeah, pretty bad numbers. But we are not finished. That's not all, folks. Remember I said ASRT was generating a ton of cash? Well, that's not the case anymore. As we see here, ASRT in the last quarter burned $30 million with its operating activities. And in the end, the net cash on its balance sheet went from $53 million to just $23 million. So yeah, ASRT's fourth quarter results are out, and as you can see, they look horrible. Yet, the stock is up. How can that be, right? Now, am I planning to sell my shares after these horrible results? Nope. Because you see, looking at the numbers is not enough. We need to understand what's happening here. What's the story? What's the reason behind these horrible numbers? So, that's what we are going to discuss now. Oh, and one thing. Nothing in this video, as always, is investment advice, okay? But you see, for us to really understand what's going on here, we need to remember that in the third quarter of 2025, ASRT pulled forward 2 quarters of Rolvedon sales. In fact, that's why ASRT barely posted any Rolvedon revenue in the fourth quarter of 2025, as we can see here. And well, as Rolvedon is the company's flagship drug, the main contributor to revenue, well then, of course this affected ASRT's entire operation a lot. And that's why the company posted such bad numbers. Now, why did ASRT do that? Why did the company pull forward 2 quarters of Rolvedon sales? Because you see, the company is reconfiguring its entire Rolvedon sales structure, which will simplify things and make the operation more efficient and profitable. Now, that's a good thing, right? And this change will happen over 2 quarters. That is, during the fourth quarter of 2025 and the first quarter of 2026. So to avoid any potential disruptions in Rolvedon supply to patients, the company decided to pull forward 2 quarters of sales. And that's why we saw this scenario in the fourth quarter. That's why Rolvedon sales were close to zero. However, with that said, that will likely normalize in the second quarter of 2026. So honestly, that's the key thing for us to understand about ASRT's last results. Yes, the numbers were bad, were terrible, right? But we need to keep in mind this Rolvedon situation. Now, moving on, another positive point last quarter is that Sympazan sales went up. So Sympazan, ASRT's second drug, so to speak, so Sympazan is growing, and that's a positive point, while Indocin sales in turn are stagnated. And that's actually quite a surprise for me, because I was expecting Indocin sales to drop more. But okay, that's it on ASRT's products, on ASRT's medications, and now let's talk about ASRT's cash flow, about ASRT's cash flow statement. Now, remember I said they burned $30 million in operating cash flow last quarter? So, here it is. Now, why did that happen? Again, that has to do with the Rolvedon sales thing. Now, let me explain that, because it's not easy to understand. So here we have ASRT's cash flow statement. Now, do you see this number here in the third quarter? Negative 80 million in change in accounts receivable. So why are we seeing this number? What does it mean? So, as I mentioned, ASRT sold a lot of Rolvedon in the third quarter, right? However, these sales were not paid immediately. The distributors will take several months to pay that. And because of that, 80 million was subtracted from net income. That's how the cash flow statement works. Because you see, for the income statement, what matters is when the sale is made, not when the cash arrives. So that's why you subtract that from net income, because you want to know how much cash actually entered your account at that moment, not just how much was recorded in sales. In any case, in the third quarter, ASRT had 80 million to receive in the future. Great. And as we can see here, $21.2 million arrived in the company's bank account in the fourth quarter from sales. Now, if that's the case, then why did the company burn cash? Well, because of these 35 million here in change in other net operating assets. Now, I promise you will understand that. But as we read here in the transcript of ASRT's last conference, this decrease in cash, right? But this decrease primarily reflects a temporary increase in net working capital associated with the Rolvedon sell-in. Specifically, this was driven by an expansion of accounts receivable due to extended terms required to complete the sell-in. As I just told you, the buyers will pay ASRT over several months. Now, I want you to pay attention to this part here, as well as an increase in accrued rebates as that inventory pulls through the channel. Now again, I promise you will understand that. So what we see here is that this negative 35.4 million resulted from a large amount of accrued rebates. In other words, it was driven by an increase in the discounts that ASRT offers. Now, what does that mean? You see, for us to understand that, first we need to understand the following. You see, ASRT doesn't sell its drugs directly to the final patient. That's not how their business works. Instead, they first sell their products to distributors at full price, who then sell them to the final patient, to the clinics. The problem is that, depending on who the final customer is, you may have higher or lower discounts. That's why, when the drug is sold to the final customer, ASRT covers the discount by giving part of the sales revenue back. So that's why we have this negative number here. And well, as a lot of Rolvedon was consumed, ASRT had to provision a lot of these rebates, a lot of these discounts. While most of their payments will still come in. So that's why their cash flow was negative in the fourth quarter. And from what I understood, this will likely happen in the first quarter of 2026 as well, okay? The positive news, however, is that things will likely go back to normal in the second quarter of this year, of 2026, and then we'll be left only with the cash coming in. Now, with all that said, what's my opinion on ASRT's last results after all? Well, it is true the numbers were horrible, really awful, but that needs to be understood within a context. We need to factor in the Rolvedon sales thing. But in my view, ASRT seems to be advancing and becoming more efficient, and Rolvedon also seems to be progressing. So that's why I'm not planning to sell any of my shares anytime soon, even with the horrible numbers we've seen. That's it for today, and see you next time.